More news coming in from the EU that could explain how Bitcoin continues to show signs of strength. Also, what's happening with Ethereum. Many of these things are happening in unison, and we'll break down quite a few fronts here from the US side of things to take a look at how it's affecting both the macro markets, the finance markets, and the banking industry, all of which play into digital assets. I'll break that down for you. My name is Paul Barrow. Welcome back into Tech Path. Let's get into a couple of topics today. We'll talk a little bit about what happened with Credit Suisse. There's a lot of turmoil within that bank now with U.S. regulators. We're also talk a little bit more on the global perspective of other aspects within the EU that could affect more dominance going towards digital assets. And then we'll break down the attack on Binance. Quite a bit here to discuss with you guys today. Make sure and smash the like button just to give you guys a chance to help this video get discovered out there. And of course, for many people that may be getting into Bitcoin or other digital assets for the very first time, starting their exploration process, sometimes that does help. So appreciate that if you guys would kill it there. Let's get into this first tweet right here. This is a tweet from Squawkbox talking about a Senate probe that is alleging Credit Suisse, kind of zoom up on that a little bit, helped Americans commit tax fraud. This is coming in now with some deep dive analysis. I want to play a clip from them. I won't play the whole thing because it's a little long here, but there's some very interesting theater going on here that is applying into some very interesting scenarios that could face a lot of these banks in the EU, including Credit Suisse, on the bad side of the U.S. Listen to what they had to say.
While, Joe, what's going on here this morning is the Senate Finance Committee is releasing at this hour a new report detailing whistleblower allegations against Credit Suisse, the century-old Zurich-based bank that collapsed and was rescued by the Swiss government and UBS earlier this month. Now, the report alleges that Credit Suisse has been helping American clients hide hundreds of millions of dollars from the IRS despite an agreement to cooperate with U.S. tax authorities a decade ago. Senate investigators tell CNBC they have found 25 American families who have secreted away as much as $700 million in the bank in recent years. And they say that reveals a corporate culture at Credit Suisse that played at least a part in the bank's ultimate failure. I sat down exclusively with two former Credit Suisse bankers who served as key witnesses for the committee's investigation. CNBC has agreed to disguise the identities of the bankers in order to protect them because they fear retaliation from the bank. Our interview was conducted in the weeks before the bank failed.
So what secrets did you turn over to the Americans?
One specific about an American family that over years hid their money in Switzerland and did not comply with their taxes.
And you knew the name of the family?
Correct.
And you knew how much money they had?
And the money they had.
So as you can see, I mean, this is not something new in the sense that Swiss bank accounts have been around for years. This has been one of the safe havens, I shouldn't say safe havens, but the havens for a lot of millionaires within many countries that have started to go in that direction. The interesting thing here is that the U.S. is now aligning this in terms of a penalty that could weigh in against Credit Suisse, but more importantly, is that it goes into a scenario of many of these other jurisdictions, including the Cayman Islands. You look at what's happening there. The opportunities now may start becoming a very stark realization that many Americans who are trying to avoid these kind of scenarios are in for a little bit of a trouble. This will be playing out, I think, in the weeks to come and kind of boiling into, I think, a lot of things that will continue to showcase a few things. Just UBS agreed to acquire Credit Suisse 10 days ago. Since then, they've been accused of violating U.S. sanctions for a second time, accused of helping dodge U.S. taxes. This is also second time. This is going to mark their 54th violation since 2000. This is $12 billion in total fines. Wow. And guys, this is our current banking systems worldwide that is dealing with this. When you look at just the fines alone compared to the entire FTX debacle, just of this one bank, 12 billion versus 8 billion with FTX in what we've seen in the crypto markets. What happens in finance industries is being clear. The difference now is we've seen such an accelerant of social media and many other things that have started to highlight and showcase a lot of these kinds of scenarios. Now you've got Charles Schwab and Schwab's situation, $7 trillion empire now looking at possibly a little bit more of a crack in the armor. Schwab has been one of the leading places out there for a safe haven for many Americans. Interesting things about them. I want to highlight a few things. Let's go here. Yeah, right here. Fewer than 20% of Schwab's depositors exceeded the FDIC's 250K insurance cap. That's pretty interesting. Only less than 20% exceeded that. Compared when you look at SVB, it was 90%, meaning a lot of companies and high net worth individuals that were holding a lot of funds in there that were over the 250, uninsured assets, basically uninsured. And that right there, and this is comparison of $7 trillion in total assets, means that this is actually one of the cornerstones of regular retail investors. This is concerning in the sense that there may be some challenges here with Schwab. That's a question mark I think that a lot of people are looking at. Remember that Schwab also acquired TD Ameritrade here recently, and they're in the process during 2023 to try to transition a lot of those accounts into Schwab's portfolio. One thing they did respond, this came from their CEO, it says the business is misunderstood. It's misleading to focus on paper losses, which is what a lot of these companies have been looking at, and a lot of researchers have been looking at, is these paper losses, which the company may never have to incur. And that is true 100%. Most of the time, just like if you hold Bitcoin or Ethereum or any other digital asset, if you don't sell it, you're not taking a loss until you sell it, if you're taking a loss at all. The same thing is happening for these long-term treasury bills. A lot of these long-term assets that really are underwater right now, but in the year of maturity, most likely these assets will be held in a position where it will be profitable for these banks. Question is can they obfuscate the potential for any kind of bank pressure from these bank runs? That's the biggest issue right now that I think faces the entire market. And when you look at things that are happening within the entire market, you have to bring in EU. Here was the UBS move. They're bringing back, first they fired the CEO right after the Suisse acquisition. Then they're bringing back Sergio Ermotti, who is the former CEO, to now oversee this rescue. Probably because of his Rolodex, most likely is his attachment to the West, and also his ability to negotiate, I think, at very high levels is probably the reason for this move. Most likely we're going to continue to see a lot more turmoil within these markets in the EU. Here's banks in France now facing more than 1.1 billion. These all coming after raids on a lot of these banks. This includes HSBC, Natixis, BNP, and Exane. All of these are now under scrutiny from French officials for, again, tax violations. So this is a very interesting scenario that seems to be playing out worldwide. The difference that you don't necessarily see dramatically is the Pacific Rim banks. We haven't seen much in the way of those, nor do we get enough information on what's happening in the Middle East to really understand where those banking systems are going. But when it comes to the EU, the United States, what we've got right now is some pretty tough scenarios. In Italy, their prime minister's party, the PM's party, is presenting a bill to split retail and investment banks. I think this is an interesting proposal in the sense of one of the things that we've already talked about here in the U.S. is the challenge that retail investors face when you get into these investment banks, and a lot of these shenanigans are put out there and putting a lot of investors and a lot of depositors at risk. This is one of the things I think that would be very welcome. And I think also getting back into the banking system of full reserve. This goes back to what we've talked about here on the show many times. You know, you think about Caitlin Long and what she's been trying to do with Custodia Bank, which is full reserve, meaning if you go deposit $100 in a bank, there's $100 in the bank. This is not something that happens on fractional reserve. You go deposit $100, you have just given the bank your money, and a lot of people kind of forget that that's just an IOU. It's really not your money any longer. They now owe it to you, but it's not yours. If they go down, that was their cash, not yours. That's the problem I think a lot of people face. And again, we're starting to see this now happening more and more in Europe. Now, the big question here is, what is the orchestrated effect here? Is there something more nefarious afoot? Why all of a sudden do we see the amount of, is it the domino effect of turmoil that we're seeing in the banking system? And then you have scenarios like what happened at Silvergate, which was ironically close to what was going on with SVB, and yet at the same time, Silvergate necessarily was not insolvent, but the regulators pretty much cut that down again because of many people saying and looking at that as a choke point on crypto and digital assets. Another one right here is going to be Binance. Here's the Financial Times coming in and saying that Binance hid extensive links to China for several years. Again, mainstream media going after a lot of these crypto exchanges, and obviously Binance being one of the largest, well, the largest, and continuing to see this. Already we've seen the recent charges from the CFTC and what they're doing in terms of the scenarios that play into what Binance is doing from a compliance standpoint. This will be the question mark, I think, for Binance, is can they hold off a lot of this US FUD? Will it even affect Binance in general? In fact, I have some interesting data here that kind of almost goes counterbalance to it. And I want you to think about why we're seeing these stories strategically placed in a very opportunistic timing as we see a lot of these banking scenarios. I get back to the point of whether you think about what Nick Carter's doing or what he said about Operation Choke Point, or if you look at the analysis of Bellagio that they're essentially potentially hurting everybody into 5 or 6 banks, that all of that could be in play right now going forward. If you look at some of the data coming in right here, a good example is Fox Business, simply saying Binance is seeing a $2 billion in outflows as their troubles compound. Now, $2 billion is a pretty significant amount of outflows. We did more research on this, and if you look at, because remember, this is just over a 24-hour period, and since the regulators have basically came in and said, hey, these guys are breaking laws, even though it's a civil action, it's still a scenario that might call for regulation scenarios that would affect Binance US and others. But $2 billion in outflows is a pretty big statement considering that Binance only holds of public data that we know on chain, $63 billion in reserves. That would be significant. That's 30 days of reserves. Then you look at this, and that is Bitcoin balances on exchange. 24-hour change right here, Binance #1 at 1,400 new Bitcoins coming into the exchange. So that's a significant amount coming back in. So what is it? Are we getting outflows or are we getting inflows? That's the difference that I think a lot of people are asking today, is why all of a sudden are we seeing all this action? I mean, we've kind of known that this is coming. It just seems, though, that it's at kind of that snowball effect that's near the bottom of the hill where we've got a lot of activity that's pushing in on this. Then you have, of course, the Fed gauge of financial crisis stress. It's approaching levels of concern. If you look back here, and I'll kind of zoom in on this on zero hedge, it's a little hard. Sometimes our charts are a little blurry. But what you see here is 2020. This, of course, was our most special time, which was during the pandemic. And then right here is this red line. And the last time we busted through these red line was 08, 09. That, of course, was the great financial crisis. Then you go back to 01, which was the dot bomb. This was the last time. That one was dwarfing in comparison to what happened in 08. Then here in pandemic zone. And now here, we're actually nearing what happened back in the dot bomb, coming back into, popping my mouse around here, to see that maybe we are dealing with some pretty interesting scenarios right now playing out. As far as interest rate traders are concerned, the damage merits rate cuts down the line. This is what a lot of people are pointing to. I would love to get you guys' feedback on this. Do you think that Powell will go ahead with all these banking concerns? Do you think we'll see a rate cut coming in or a flat next FOMC? I think a lot of people are still leaning into a no move on the next FOMC or possibly a rate reversal. If you talk to Elon Musk or you look at a lot of tech pundits out here right now, mainly because most of those tech pundits are being stressed on the VC side of things. A lot of this, I think now we're starting to see the bigger picture here. There is a big pressure here within not only the American financial system, but I think the global financial system, which means that we could be looking at opportunities within digital assets. This is all playing into place. Only problem is you've got Operation Choke Point potentially coming in and continuing to lessen the opportunity for rails when you go look at just the challenges that many of these exchanges, including Coinbase, has had with their deal with Cross Rivers Bank, which is, Cross Rivers, remember, is one of the last don't know if you guys know this, Cross Rivers Bank was one of the last banks that were actually approved because they have not really approved any new banks, meaning the Fed, which is why we haven't seen new strategies coming in to this American financial system. So interesting stuff. Here was ALF. We've had Macro ALF on the show before, and it says it took 215 years for the U.S. to reach $7 trillion in debt. It then took 27 months, this was March 2020 to June 22, to add another 7. And then you can kind of see right here, guys. I mean, this is not a good sign for not only the U.S. dollar, but for the overall market capacity of what the United States could be. I think this is where it gets into it. And I think this might be why we're seeing such pressure on digital assets, is because the current monetary system is beginning to crack. And when you have the alternative that's starting to play into the global perspective, especially since crypto and digital assets are a global perspective, it's very possible we could be looking at an orchestrated effort, which I think a lot of people do believe that that is the case. Here's another example of this. This is just in. China and France now complete their first gas deal, trade using Chinese yuan. This is something that has been a big deal within Europe, of where we're starting to see deals being struck outside of the US dollar system. Now remember that when the petrodollar was put in place, a lot of the things that were negotiating into the deal with the Saudis was the fact that the US dollar would be the baseline for this acquisition, or for acquisition of oils. Now you've got Saudi Arabia now in the orbit of China and Russia, possibly toward a new strategic alliance, which could, again, align itself, outside of Russia, one of the biggest, the biggest oil-producing nations, that could be aligning outside the United States dollar as a trading partner. This will be interesting to play out, and whether or not. We're actually going to have a guest on next week that's going to be breaking down this alliance and getting a little deeper on this, because this could have an effect on the dollar, which obviously will have an effect on how assets are moved into the space here in the digital side of things. Other things I want to touch on here before we kind of get to some other points here is, by the way, don't forget, smash the like button, guys. We'd love to get your feedback. If you haven't dropped a comment or two in a while, make sure and do that, because it's one of the key things that helps us and our team really understand what people want to listen to and view here on the show, and how we cover a lot of projects, where the markets are going. Do you like the macro coverage? Do you like the interviews? Those kind of things. We always love that feedback. Speaking of our interviews, John Deaton's been on the show many times. It's an interesting point right here that John's making. If the fact that we have leaders in the United States pushing this bill does not scare you, you don't trust and truly appreciate freedom. This is in reference to Rand's tweet about a bill that is being proposed in the U.S., which would be a minimum 20-year sentence and $250,000 in fine for using a VPN to access any app that the government decided to ban. Now, this, my friend, would be a massive blow, I think, to some of the markets out there. This is why I think we're going to see digital assets, crypto, and blockchain become the talking point for the next election. This is getting very interesting because of the way that the U.S. is constructed, especially if you think about the Republic. The Republic is different than most other countries. Every state has its own sovereign capability, and it doesn't necessarily have to comply with federal law in most cases, which is why you have CBDCs now being challenged in both states of Texas, Florida, and others, starting to, and we'll most likely see a coalition of Republican states, especially as we go into the 2024 elections, especially if DeSantis starts to move, even though he has not announced yet. But if he does announce for running for president, it'll be an interesting situation, and we start to see political alignments really get into place here. Further into this, you had Arthur Hayes coming in and said, hey, listen, fear has been the number one scenario that's pulling the 2023 market along, whether you call this a bull market right now. And I'd like to know, do you think what we're seeing, because I'll pop open the Bitcoin chart here in a minute. Do you think we're seeing a entry-level bull market approach? I'd love your opinion. I know what mine is. I'll give you that at the end of the show, but I'd love to kind of know, do you think it yes or no if we're in a bull market, or do you think right now we are just dealing with all of these scenarios that are playing out both from a regulatory standpoint, a banking, traditional banking standpoint. And then you have the macro element. It feels like there's a perfect storm brewing here around what's happening in the shift. And remember, every empire always struggles its hardest right before the end. It's kind of like fighting for your last breath if you're drowning. Those kind of things are kind of scary. That's something to be thinking of. Here's another one right here. Regulators blame now social media. Again, struggling as we're going out. Regulators are now blaming social media for Silicon Valley's rapid collapse. It's a game changer. This is something I've talked about for a long time, and that is that the accelerant that is Metcalfe's law, it's the internet, it's the network effect. These kind of things work and move. It's why we've created and developed the CPI, our own crypto power index, for the last almost 10 years. The development of sentiment data analysis has been on the forefront of that. All of that comes from social, and social is the accelerant that drives news. It's what also drives popular opinion. It's also driving elections. So it's not uncommon that we may see this actually driving the financial condition of many of these banks and so on. Here was the last clip I wanted to play. This was from Kristen Sinema right here. Listen to what she had to say.
Silicon Valley Bank on the Federal Reserve's watch very clearly calls into question whether or not some of that trust was misplaced. Make no mistake, the lion's share of the blame is on incompetent bank executives. And it's outrageous that these people took bonuses and sold stock in the days leading up to the bank's failure. We should hold these executives accountable for the fullest extent of the law and claw back those bonuses and stock sales. I'm co-sponsoring a bill to do just that. But as I laid out in a letter to you, Vice Chair Barr, that, by the way, was signed by 11 other senators spanning the ideological spectrum, it's gravely concerning that retail participants, literally just regular everyday people, were able to figure out that something was wrong with Silicon Valley Bank before your regulators took appropriate action. Now, these folks don't have access to non-public information like the bank examiners do. But when people on Reddit and Twitter can spot bank mismanagement before the regulators, something is terribly wrong.
All right, so interesting stuff here, guys. I think you know it, and that is that when you think about what's happened in social media, you think about the dispersion of media overall. I've been in the media business for almost 20 years, graduated out of the tech industry. And one thing that I noticed early on was this massive shift that was underway, and it hasn't changed. You know, I was laughed at when I was basically thinking that one day mainstream media would be gone and we will see the rise of online video. That happened. Laughed at when we were talking about launching podcast networks. All of that has now been proven. The whole point around social and the accelerant that this applies, it gets back into Arthur Hayes' tweet here, which is kind of counterproductive if you think about this, of what fear typically does not draw activity into risk assets. And it's the exact opposite. What we're seeing is fear now, but it's coming from the institutional moderates that pretty much control most of what we've done in our economies worldwide. And now we're starting to see the chinks in the armor actually unravel. The reason? Social media, shows like ours and many others on YouTube and podcasts, etc. The dissemination of information and the way that and the speed in which this media moves is what's causing all of this, which is why digital assets, I continue to think, will be the uncovering of what the real opportunities are in the future. So we're going to get into a couple of questions for you guys. I'll take a look at Bitcoin real quick. And in the meantime, let's check out the poll real quick. All right, poll coming in. How long until bank crisis FUD is behind us? Oh, geez, months. It's over. Days, 4%. What was the number on the, it was a lopsided number, 66% months? Wow, that's insane. I mean, in reality, this is something that I think if the longer it stays, the more opportunity it will have to affect the regular American. Because guys, I want you to realize something. When you're watching our show, to a certain extent, you're in a bubble. And this is something we talk about in the pit a lot in terms of just the research that we do, because you can guide your research based on the narrative that you're painting in your head. You can easily go in and say, hey, Binance has got outflows, and here's what Fox is saying, or Binance has got inflows if you go follow Bitcoin. So you have to dive much deeper. But the thing that you have to always be aware of is that, yes, there is a bit of a bubble here. The difference now is this bubble is extending into mainstream effects on society, politics and finance. Those are the two biggest ones that will affect an average person on Main Street. And when that occurs and they discover something for the very first time, the uniqueness of digital assets, the understanding of what Bitcoin and Ethereum can do, games start to change pretty quick. And it fails very slowly until the end, when it fails very fast. Think about all of the countries and all of the sovereigns that have accelerated into hyperinflation. You can go look at many of them. Just do your Wikipedia search out there. You'll start with Venezuela. You'll understand what I'm talking about. Let's get into a few questions here. By the way, Bitcoin now running at 28.3. If you guys have been tracking, a little bit of an upside to this right now on the 1 hour right there. But moving nicely over the day, where it clipped right back up here to 28.5 on its high for the day. So again, good sentiment numbers that we were reporting yesterday, and again, more positive sentiment on Bitcoin again today. Part of that, I think, is because of the dominance. Let me just jump over here to the Bitcoin dominance chart real quick. Again, still holding at 47. Look at that. That's the 1 hour right there after we had that little fall off right there, small amount. But when you zoom out, let's go out here to the daily. And we'll squeeze that down a little bit. You can kind of see the activity here that has been flying with Bitcoin in terms of dominance, has been holding very strong. All right, let's get into a few. Ron Hart says, government has more Bitcoin, yes, than Tesla. In fact, they're the largest holder. You are correct, Ron. Again, smart people in our audience. Thanks for the comments. We're surrounded by free Bitcoin advertising. No kidding. We are. Victor says, China will let Binance fall. That is a very interesting statement, Victor, that I think you are exactly right. But remember, Binance is not going to fall at all. If anything, this will only seed and benefit Binance in the global action because of the pressure that is happening really within the shores of the United States. That's the concern I have right now. I like this one. Buying gold, even if you hate gold, it's a lock. You know, gold has been actually going up a little bit. Let me take a look at my gold chart. I actually put a gold chart on here the other day. Right here. Here's gold, guys. Almost trading at $2,000 an ounce. 1971. Peter Schiff would be happy. Which, by the way, we're going to have Peter Schiff on the show next week. Or, no, I think he's coming in this week, right? I think it's this week. Anyway, we're going to have him on the show. We'll see. It's more talking about where the future of banks are going. Let's go in here. FTX couldn't even last 2 years with the support of Gary Gensler and crew. Now Binance is going to be fine. That's for sure. Jen Smith says, anyone see O'Leary's comments on Yahoo Finance? He said, Binance is done. Well, that's an interesting statement coming from, well, you know, he's just looking for a clip there, Jen. They are missing billions. If you short the dollar, you're going to hit with an overdraft fee. Yeah, no kidding right there. Fun fact, Bitcoin chart started getting bullish as soon as Bitcoin ordinals movement started moving in February. Remember, everybody laughed at stacks, I think, in the beginning. Things changed a little bit. Just to show you the stacks chart right there. That's the stacks chart, guys. Look at that right there. This was December, and then boom, right here in January. Just as you zoom out on that, just the kind of number. What was that growth on stacks for those of you that were listening to us back in January? Even right now at 306%, up here at its high, 395%. Take that to the bank, as they say. All right, guys, if you are listening in now, thanks for staying around to the end of the video. Best thing you can do and help us is smashing the like button. Right before you leave, don't forget, just one like from you, it always helps. If you're not in our Diamond Circle, get in. It is our free email newsletter, and it comes through Substack. It is also an additional way that we drop additional alpha. We just dropped some additional content this morning. All of that happens within Substack. Very easy. Click the link down below. By the way, we now take crypto on all of our membership programs, including the Mastermind and our CPI. We've put a secret code down in our description that gets you guys 20% off on our annual program. So check it out. If, of course, you guys want to catch me, it is out there on Twitter at Paul Barron. We'll catch you next time right here on TechBat.